All right, welcome to the Note Investor Podcast. I'm Dan Deppen, and today joined by Rachel Sims from First National Acceptance. Rachel, how's it going?
Hi, good. How are you?
Good, good. Well, appreciate you joining. I know we've been we were just talking fairly recently at Note Expo, but maybe for people who aren't familiar with you, you could give us a quick rundown on kind of who you are and what you do and what you guys do at FNAC.
Sure. So I'm Rachel Sims. I've been here for just over 8 years now. I buy loans for the bank, and the bank is a first lien performing note investor. So we like to see the first liens performing paper. We'll dabble in some reperforming paper depending on how that's going. Open in all 50 states. Um, so that does include like New York, all the tough ones that sometimes people do ask. And we have a title processing here in the bank that helps us clear up title work. We order title work typically from a national title office, anywhere that can usually close anywhere in the 50 states. Mobile notaries have been lately our go-to for closings. So that would be somebody just going right to the seller's home, signing documents with the notary sending it back to the title office so we can get funds out to you. Typically we close within about 30 days. Holidays kind of change things and or just summer breaks, or if title can be messy, can kind of lead things out a little bit longer than 30 days. Lately, we've been able to close probably at least 10 deals every month, well under 10 days. So that's been a really big success for us. We typically try to close about 100 deals every single month. Um, that's what we kind of do every day.
Yeah, that's cool. Yeah, and so the folks like who aren't familiar with you guys too, right? Like I know like when I've sold notes, which is not a ton, you know, you guys are like kind of the go-to. And so like my view of FNAC is if I can sell to you guys, I like to because you typically pay more of like you said, the close fast, like much easier to work with generally than individuals, but your buy box is a little stricter, right? So like a
It
lot of
is.
times not everything meets, but if it does, like it's always been kind of like the place to go for me.
Yeah, our buy box, it can often change. So that can kind of be flowing with that as well. And then our rates
Mhm.
do change too. Like when the feds go up, we kind of go up with ours, and they go down, we also go down. So that can be there. And then certain states or certain properties, with our overhead, we definitely like to see sometimes higher yields. Vacant land, commercial, opposed to like an investor like yourself or other investors who are gobbling all of those other ones that we would consider a little bit risky. So it
Mhm.
definitely, yep, our buy box can definitely change. And I think
Yeah.
like last year or previously, we were always talking about, we don't want to see anything under 25,000, and going into 2025, we're going to increase that balance, and we probably won't bid out anything under than $30,000 moving forward into the new year. So that's kind of a change for us too.
Is it just because like the really tiny ones become not worth the overhead of the
Yeah,
transaction?
so
Yeah.
so the great thing about the bank is we have lots of money, and we can get, we can buy the places in Alaska or New York or that are kind of, the tougher ones. But our overhead is, we have over 300 people. We need to, keep employed or insured or and X, Y, and Z. So the $30,000 ones haven't been super profitable for us, but they're great notes, like absolutely great notes. I would definitely do them. Um,
Hmm.
just for us. It's just, we might make a really bad offer at like 15,000 or something, and that's not
Yeah.
steering anybody our way for those ones. Typically, we're just trying to find our way to get our money out of the lower ones.
No, that makes sense. Like, are there any particular states you prefer to buy in,
Oh
or
my
other ones
goodness.
you're less interested in? Yeah.
So Florida, I love. Most people are aware that sometimes in Florida they record their notes right in on the county. So that's really helpful for me. I sometimes when people say, "Hey, I have an accepted offer, just still waiting on documents." If it's in Florida, I usually go right to the county, trying to find as much information as I can so I can just get evaluations and title ordered once I have that purchase and sale agreement.
Hmm.
Um, Texas is another really good one. Their statement of locations when it comes for mobile home titles is something that I'm getting more familiar with, but I'm learning that that process is much smoother than opposed to any other state that might have lost a mobile home title, since Texas does statement of locations. It's been really easy to navigate. Mobile homes are a big purchase for us in a lot of states, and Texas is nailing it down really well. Texas also originates so many, so
Yeah, that's where
yeah.
most of them are. Yeah.
That's a big state. Arizona is a good state too, mainly because it's kind of cheaper to close. Um, and then, I mean, we're open in all 50 states. The ones I have not closed in yet is Vermont. That one's tough because that's the one state that legally the borrowers have to give you permission to pull their credit, and not everyone
Oh,
wants to
even
do
for a
it.
soft pull?
Yeah, so not a lot of people want to get involved with that, which we understand. So I don't think the bank's closed in Vermont in years, if we've ever closed at all. And then me
Mm-hmm.
personally, Wyoming and South Dakota and North Dakota, I have not, I've closed in 90 or 45 of the states, but those few we have not got yet.
Wyoming, maybe just because it's small population
That could be true. But they're in
wise.
Rhode Island, so I would assume I want to tick off every 50 states, I just want to be able to say I've closed in all of them, but I'm
Yeah, that's
struggling there.
interesting because I'm close by. I'm only an hour and a half from Cheyenne, and I have a lot of friends who are real estate investors up there, and there's a decent amount of activity, and like it's known for being a very just in not necessarily notes, but just in general for like business and real estate.
Oh,
It's
really?
it's known for being an easy state to
I didn't
operate
know
in,
that.
at least compared to Colorado. Yeah, they're very much kind of conservative, business friendly, like anything goes. Kind of their
Okay.
state is the reputation. I don't know about the details, but I think they have a pretty tiny population, even though
Okay.
it's a big state. So it may just be that there's not a lot of activity.
Maybe. I mean, maybe if your friends are realtors, they can start teaching people like the note industry if they don't sell traditionally.
I've talked to him. So my friends up there have a lot of rentals.
Okay.
And then I know somebody else who's an architect that's just
Oh,
like trying to build stuff. And the challenge they have there is it's just labor pool. If you want to build something, it's just really challenging
okay. I
to
guess I didn't
find
know that.
people to
I
do it.
wouldn't have thought about that.
Yeah, so they have this chicken and the egg because they have a lot of renters because there's a lot of oil and gas activity, and there's actually a decent amount of
Okay.
military activity, especially around Cheyenne
I
and
don't know that.
whatnot. But yeah, it's kind of an interesting.
Okay.
So not to yeah detour on that too much, but
And lately too, we've been seeing a lot in Hawaii and Alaska.
hmm.
Hawaii is a great state to close in, but I will say Hawaii, and I don't know if it's title companies or servicing. There just seems to be insurance, like not technically required, depending on who you ask, but
Hmm.
it's in the mortgages that it is. So some people aren't getting insurance like in Hawaii, so that's been kind of tough. I've been seeing far more files, no issues with insurance like in Florida opposed to Hawaii, which I was kind of thinking would be the opposite, but
Yeah, I would have thought that too. Like I would have thought Florida with insurance rates going up and things like that
exactly.
would have like its own special set of risks. But
And then you see all over the news, like insurance companies just completely pulling out of Florida, but like we haven't had been affected at all. It's been some of the ones towards Hawaii. Um,
mhm.
New York, I'm gonna say is still a good state. I close there probably every month, at least one or two deals. Is it more costly? A little bit. Sometimes you have to have that abstract depending on what county you're in, but we're learning not every county is needing them, so we're lowering some fees there. So that's been
Mhm.
nice. Um, Obviously you still have the state laws, so when it comes to New York, like we want to see more equity and probably more of the nicer credit over 640 opposed to when we get loose and we'll say, oh, we'll buy the 570 credit. That one probably want to be for New York, same for New Jersey. Um, I can't think of any other ones that I love.
And is that just because even though you're buying performing, if it did go non-performing, there's extra costs, you're just a little more
Yeah.
conservative on the, yeah.
And in New York, it's the one state that I have to deal with lauderers in the area. Um,
Oh,
so that's been tough. Like we bought a multi-unit and you have to do the purchaser interview to reach out, make sure all is okay, and they let you know, hey, yeah, there's just been a squatter around for the last few days and you just
hmm.
won't leave. So we have to tell the police to go out there. And sometimes it's tough for us because we're not there face to face or somebody. We're like, hey, we're a few states away. Can you go out? Um,
Yeah.
so that can be a little tough, but still been pretty successful there, opposed to like we don't close a whole lot like in Ohio, Illinois, Indiana with how close we are to them.
Yeah,
Um, but we close here and there, but they're not in our top states like New
gotcha.
York would be. Yeah, we've closed far more there than the other three.
Yeah, well, New York's a pretty highly populated state. And I know like when I was at the DME conference earlier this year, I mean, there are a lot of people who buy notes in there,
Mhm.
even though it's like renowned as a place to stay away from. And I've stayed away from it just because it's far from my backyard. But yeah, it was interesting. I've talked to a number of people who will go out and buy like non-performing seconds and things like that in New York. So there's people out there who will do it.
I just wonder how they're doing it. Like, what's the real manpower that's going in behind it? Are you going out there? I wonder.
Yeah, I mean, a lot of the people that do it live there
Oh, okay.
and they have, attorneys and they've got a team that's knowledgeable and that understands how to operate. And then they're just pricing accordingly,
Okay.
right? For the other things. So
That makes sense. That makes sense.
yeah, yeah. So what tips do you have for people who are looking to sell a note to
Oh,
you
okay.
guys? Like let's say maybe like an existing note they're holding in their portfolio. We can maybe kind of start there.
Tips I would have for anybody would to get a personal guarantee on the loan. If you are gonna lend to somebody and they want to say, okay, I'm gonna come to you with my LLC or my trust, that's a great opportunity. It's an opportunity to have, but I'm gonna strongly suggest that you also get a personal guarantee. So if anything goes south, you have an actual individual to chat with about the situation, to go and try to find a solution, opposed to like if it's a business and they just close shop, there's just not a whole lot to do. Now I
Mm,
get it. You can have the property. The property is a great asset. For us, we don't pride on taking property back. That's just not something we've been wanting to do. We're a national bank, so we would like to work it out and try to have people be able to stay in their homes as far humanly possible. So
hmm.
that would be my biggest tip. Try to get a down payment. Stronger the down payment shows that the purchaser wants to stay. I'm seeing for even it being 2024 and like with COVID and the world that we've had lately, that people are doing $200,000 deals and they're not getting any sort of down payment, but then they turn around and want to sell their note. Um, that's been tough for us. If the borrower doesn't have any equity into it, we don't want to just put out a big number. So maybe we stick to like partials on those.
Hmm.
Um, Smaller terms, but I will say what's kind of tough right now is, we had all these high rate hikes with the federal government. So then traditional lending was even going to like a 35-year or 40-year people might have seen. So then they're also creating these notes at 40-year, which we're not loving to see that. We want our money paid back, soon. So I would try to say if you can, maybe put a balloon date, a 10-year balloon if you're going to amortize it over 30. Or
Hmm.
maybe not focus on a balloon date and focus on what's truly affordable for the borrowers to get paid off at the quickest turnaround time. So it could be get creative. It's an owner financing. You could do like a 22 year or a 26 year or maybe like a 14 year.
Yeah, they're just numbers. There's no hard and fast rule that it has to
Exactly,
be
exactly.
240 or 360 or
And even with the federal government going up, I've been seeing newer notes still be at like a 2%. In
Oh,
my
that's
opinion,
interesting.
in my opinion, I would still say at least try to get an 8. Your owner financing it. This is your investment. If you want it to be, a sellable note as soon as possible for investors for you to get your best offer, I would definitely try to say, I would try to go that route if you can.
Yeah, I've seen from the call the underwriter side where I've seen some people doing lower interest rates is when they're doing like subject to deals and they've told me they go with the lower rate because they want to minimize the chance that the borrower pays it off early
Okay,
because they don't want to unwind the subject to. That's an area I've been diving into more myself because I've never done one of those. I'm not an expert on it,
sure. Same.
but I'm not sure about that because like if you have to unwind it, you want to be able to sell the note as
Yeah.
well. So it's like, yeah, I think you still want to maximize
But I could see
the
that
rate.
because we've had our underwriters, have conversations, it's this long to go, but who's gonna pay off that 4% rate? Like, you're not gonna refinance that one, so maybe they're
Hmm.
onto something. I'm not sure.
Yeah, it's hard to tell, but the other thing you mentioned was about the terms and trying to the term of the loan and trying to shorten that. What I always found interesting is, as a buyer, I like the shorter term, and it's also considered more consumer friendly because over the life of the loan, they're paying less interest, they're building equity faster. So assuming the borrower can afford it,
That's true.
it's actually kind of nicer for everybody if you can bring the term in.
I agree. That's why partials are a great way. I would tell also sellers to maybe navigate learning their different opportunities of their cash flow, whether it be just a small little partial, get some cash out, trying to understand that language too. Those
Hmm.
could be a great avenue for everybody involved.
Yeah, definitely. So like, what are some of the other things you look for when you buy a loan, compliance wise? Because I know like seller finance loans are originated all kinds of different ways. Like, what's some of the stuff that you guys look for?
Sure. So definitely not a legal attorney or anything along those lines,
Yeah,
but
me
from
neither. Yeah, should
my
like that.
understanding
Yeah.
is, if you're just an individual and you've sold maybe two or three notes your whole, or created two or three notes your whole life, reasonable rates, probably something under 9%, then I'm not so hard on disclosures or like, settlement statements and everything being perfect. It's more when you have a seller or maybe like an LLC seller who has originated five in a year and they're all over 11%. One thing I'm looking for then is maybe the state usury rate. Every state's different. You couldn't quote me on what's what because I have to go by a
Yeah.
sheet all the time. Um, so I'm kind of looking at that. How many they did the year of. So origination, RESPA is always the year of, and then the year prior. So I'm wondering like how many they did the year before the note that they're currently selling to me also. And then
Hmm.
other than that, we look at their closing disclosures and then if they send a set to the borrower. So from my understanding, when you have really high rates, you're originating so many single family wise, because like vacant land, commercial, all of those aren't going for the, Dodd-Frank rules or whatnot. So what we're looking for is like, did the borrower have the opportunity to review the documents 3 days prior to like closing? Just those dates are really, really big what we're seeing. We're seeing a lot of things that have closing disclosures, but the dates weren't signed 3 days before, and that the borrower didn't have that time. Uh,
Hmm.
we're missing things like a basic settlement statement to be there, or like if you have a high interest rate, you have that certain document that goes over your interest rate or how the interest works. So just
Yeah.
little things that might be little to other people, but as soon as you have disclosures out and you need those disclosures and they're not done correctly, unfortunately, I wouldn't be the buyer for you. My legal
Yeah.
reviews them all and just tells me yes or no.
Yeah, and unfortunately, a lot of people are not familiar with the rules
That's
around
true.
those because I have a lot of people who are originating loans. You send them like the loan estimate. So for people aren't familiar, right? And we're talking consumer owner occupied properties. This doesn't apply to like investment properties, commercial, that kind of thing. But there's a loan estimate that you go out 7 business days before you close, and then that closing disclosure that goes out 3 business days before. And a lot of times, work on a loan, we go through the underwriting process, send out the loan estimate, and they're like, "Great, I'm closing in 2 days." And it's like, well, I can't stop you from doing that, but it's not compliant. It's not going to meet all those rules that you're looking for.
Yeah, that's so tough. I get bummed every time. I'm like, I have closing disclosures and I send them to legal and they're like, they're just not there yet. So we're not able to buy. So that's always a bummer. But when they're the properties that are like rentals, rentals aren't applied to those if they're a true rental. Um,
Hmm.
in the vacant lands or commercial. So those are nice to see. If it's just your one-off, the disclosures I would say probably aren't absolutely needed. Always a good thing to have, just so you make sure you're doing the transaction the best correct way for yourself and the borrower too. You want your borrower to be protected.
Yeah, absolutely. Yeah, you don't just want to have the scenario where the lender's like, oh, the borrower made a big down payment, so I'll deal with it later if it doesn't work out. That's not always super great. Yeah. So what kind of down payments? I guess you touched on this a little bit, but like what kind of down payments would you like ideally like to see to get like the maximum price
So
for a
we,
loan?
my best offers for equity wise, so I have a few different tiers. So like credit over a certain point, equity over a certain point, balance over a certain point. And single family homes will always just be our best offers. In
Mm-hmm.
any offer though, we always want to see at least 20% down. Like that for us, we're kind of looking more at those ones opposed to they just made no money down. However,
Mm-hmm.
every file is different. And I quoted a file just today, actually, that it was $100,000 sale price and there was no money down. So I'm like, well, why is there money down? And they were like, well, they just knew each other. They gave him a deal. Here's the evaluation. Here's the signed document saying that, I know I sold my property light, but my attorney told me not to. But I said, who, I wanted to do this for this person. Nothing's wrong with
Mm-hmm.
that. Absolutely nothing's wrong with that, especially if you have that relationship with them. I was still the credit ended up being pretty well. The interest rate was decent. I think it was like 6%. The term was weird, like it paid off at maybe 11 or 12 years. I can't remember exactly, but they were still able to get like a 12% discount from me for my offer. And they said that that was, really reasonable. Um,
Mm-hmm.
I've seen files where they put $1 million down and some of those files still are not for the bank. For example, if it's a $2 million deal, they put $1 million down and it's a commercial property and the remaining balance is $1 million. I'm not going to quote you for your full buyout. I'm still going to stick to a partial on something like that. Even with that $1 million, which is like it's so attractive. There's nothing that could go wrong. Um, land, I will say land and commercial, we probably want to see a higher, more like the 30% range if possible. And then
Yeah.
anything, if credit's like under 560, we really want to see 50% or more equity.
Mm-hmm.
Preferably that be the borrower making payments or the borrower made the down payment, just so big. Those ones would go a long way.
Yeah, what I've observed a lot too, sometimes like sellers get painted in a corner a little bit where they're like having a hard time selling a property
Okay.
and they're like, well, I'm going to take what I can get. And that's
Yeah.
why sometimes they're like, well, I've got this guy and he's got the small down payment, but they're going to take this one off my hands. But it's a tricky thing because then when you go to sell the note, there's a price to be paid there.
Yeah, or I'm seeing, they don't put a down payment up front and then they put in the note that every like 6 months a $5,000 reduction is to be
Oh,
made.
that's interesting.
So those are kind of creative ways because they do build equity really fast, but for us, you know, if they don't have the credit, we're gonna say that's a great tactic to try to get some equity and to have them build it so quick, but we're just probably not gonna assume until we've seen a handful of those reductions made that they can make them. Unless credit's well, so anytime a file comes to me, I'm always checking credit first. Credit is the first thing
Yeah.
I'm gonna look at.
Because I've been, pulling credit on a lot of these files lately, and I've seen some wild credit reports in there, because like that is the other thing too, Colorado. Sometimes people are focused on the income that the borrower has and making sure they have enough, which is obviously super important. But yeah, I've also seen some files where the borrower had plenty of income, and I'm like, they can totally afford to pay back this loan. But if you look at their track record, they probably ain't going to do it. It's
Exactly, yeah.
just not in their blood to
Credit's a
do
big one
that.
for us. Credit also, you can get borrowers information on like where they work, how long have they been employed, what was their last few years of employment look like. And we kind of look at like that too. Like if you have somebody who's going to, McDonald's and then to the mall and then maybe to this company and then to this company, all within maybe 2 years, that's kind of rocky for us too. Even though
Hmm.
credit might be okay, just like the constant job back and forth is kind of just to look out for something, right?
Yeah. How do you treat it if, let's say, like the borrower is pretty young, like maybe the borrower is like 20 years old, 20 or early 20s, and so they haven't really had time like to establish this track
Sure.
record? Like what adjustments do you make for those situations?
I think for us, it would be from what I've seen lately, like I don't think we've ever really bought land or a commercial transaction where the borrower is so young. Um, I think most of the time when we're seeing the borrowers young, it's mom sold to son, or hey, this is gonna be my child's college property while they're in college for some time. So they're kind of like making smaller payments or something along those lines. Credit's usually
Hmm.
not there in most cases, but they're the ones off that they're there. Um, we had a file recently where it was she was in her 20s, but she lived right next door to her mom. And there was a great purchaser interview. They kind of talked about everything on what's kind of going on, and we were still able to make an offer and close the deal. It wasn't a super aggressive 5% discount offer or anything. But
Hmm.
there's some stories where we'll probably just want to talk to the borrower and make sure like they understood what was going on, because you'd be amazed how many people, and obviously we can't quote them or even consider them, but they'll, mom and dad will sign the note as borrower, and then they'll put their 16-year-old on the note because they're thinking, hey, if something ever goes wrong with me, you have rights to this property and X, Y, and Z. And that's not technically, in our opinion, at least, the best way to go around that. In my
Hmm.
opinion, is that if there's a minor on the note, we got to get them off as soon as possible. Um,
Yeah, what people can do in that situation where, like, say they want to have like their kid as the co-borrower or whatever, but they're not going to qualify, you can put whoever you want on the deed,
yeah,
but have the primary person on the actual mortgage deed of trust, whatever the
yeah. Like there's so many times
instrument
where it
is.
comes and I'm like, I get it, I get why you're doing it, but that probably wasn't the best advice that you received at
Hmm.
the time.
Yeah, and I've seen it too, where sometimes people have a really, a borrower with just really like bad credit, and they're like, well, maybe I can add a bunch of co-borrowers to it, and that might help from an income perspective if the
Sure.
income isn't making it, but then you would still have someone with bad credit on the loan, which creates all kinds of other
Yeah.
issues.
And we
So,
kind of look at that too, if you have a co-borrower and a co-borrower, but the good credit's not living at the property, that's kind of a not so stellar aspect for us. We definitely want to see the better payer living at the property if possible.
no, I agree. And because I've bought a number of like existing loans that I ended up having to foreclose on, that were those very situations where there were two borrowers, but one of them was just kind of the co-signer person because the other person didn't have credit. And I've seen a bunch of those go south.
Yeah, so do you have to
Uh,
foreclose on like the good credit who's not living there too, like, and they
Yeah,
can't
because
have
because
the
they're
credit?
signed, they
Oh
signed on it.
man,
Yeah,
so
yeah,
tough. That is tough.
yeah, for sure. So, and then my other question for you is like, how do you guys assess value of the property, or how do you validate, like, what it's sold for, but how do you kind of validate that the price made sense?
Yeah, so I think at some point we were burned not too long ago, maybe. We received an evaluation that said it was this. We knew it sold for this. Um, we bought it and immediately went south. And then we did like a different evaluation at that point. Um, and that evaluation came in a little rocky. It came in quite well under what our original one came in at. Um, and then we started digging, and then we learned that just a few months prior to our purchase, it had only sold for like half of the amount that our note was for. And that was a tough one. So that's why we're definitely trying to figure out how long the seller bought it for or when before they sold it. Because if
Hmm.
you buy low and then sell high, there's still a good chance that it's still going to be worth low at the end of the day if we ever had to take our money back. Historically, though, if you have a property that sold for 60,000, a few years later it sold for 70,000, a few years later it sold for 110,000, like, and you get an evaluation back at maybe 108 or something just under that current sale. um those seem more safer than, oh, we got a value in for 100,000, but then just not too long ago it only sold for 50.
Hmm. Yeah,
Those
because
are,
I guess you can kind of connect the dots if you have more.
yeah. People who we can, Google Maps is a great tool. You can see like what properties used to look like for years going back
Hmm.
sometimes. So like we've seen businesses turn into homes, or multi-units, or then turn into the like multi-homes that have like four inside of them, like people living in, opposed to it just being commercial or commercial and home. So it's kind of interesting to see. And then sometimes you can see those values. I'll say Texas is one of the states that are, I'm pretty sure it's just a privacy state, that you're not going to usually find the prior sale prices like you
Mhm.
can in Florida or Michigan, that you can find what it sold for the most few current times after that. Or
Yeah. Yeah, because I know like a lot of times too on seller finance loans, like the buyers might be kind of anchored on their monthly payment and they're comparing it to rent. And so sometimes like, yeah, I see a lot where like the price is kind of inflated.
Yeah. But then,
But
and then my other thing is sometimes with it is like we have land, right? And and so to how we get the value, like you will always send an agent out to do an evaluation, run comps and send it to us. But it's always funny to me that I feel like everybody's opinion on land is just a different value. I've seen notes where the seller's like, okay, well, I sold it for say 50,000, but the value came in at 100,000. The seller was like, I inherited it. I just wanted to get off my plate, whatever you guys want to do with it. Or I've
mhm.
seen people buy, and then go reverse where it's like the purchaser just wanted to buy it for 100,000, even though they knew it wasn't worth that, but they wanted the land so bad. Like I've seen people turn in land and then they put like a mobile home on it or an RV on it, and then they dig around and make their own garden system, and then they have bring in well, and the value ends
Mhm.
up being eventually more in the land opposed to any brick and mortar or structure on the property. Um,
Yeah.
so that's something that is always interesting to me too. Like land, I feel like is just a big, just what somebody wants, what the purchaser wants for is willing to pay for it. Um,
Yeah. And that's why like I'm not opposed to it. I've been looking at them, but I haven't actually bought any land notes yet personally because I feel like a lot of local knowledge is required to know what is this thing actually worth and you know.
can it be built on? Does it have road access? So
Yeah, is
those are
there
things we look
water? Like,
for
is
land
there
too.
yeah, I don't know those nuances in other states, so it's
Yeah,
kinda
land,
tough.
if it doesn't have road access, or we're pretty much out. We don't want anything that has to be landlocked or you have to drive through someone else's yard to kind of get there.
Mhm.
Recorded easements obviously help. But those are some things we're looking for with land.
Yeah. Well, cool, cool. Well, Rachel, thanks so much for joining again. I really appreciate it.
Yeah,
So
you're
how
so
can people
welcome.
get a hold of you if they want to learn more? How do they reach you? Like if they have a note that they would like to get a quote on?
Oh, sure. So my email is rachel.sims@fnba.com. My direct line 517-336-7623. But I am a stickler when you send me a quote. I want to know the property address, how the property is being used. So if you're saying, oh, well, it's a house, is it the buyer's primary residence? Is it the second home? Do they rent it out? Use it as an Airbnb? Sale price, down payment, that interest rate, payment amount. So all the terms, I want to know everything.
Yeah.
Just so you know, heads up.
Awesome. All right, Rachel. Thanks again. See you next time.
No problem. See you soon.
Bye.